morning, everyone. This is Vic from Forex Trading Academy. Hey, it's been a while. I've done a video, and today I wanted to take the time and go ahead and just do one very short video in reference to how to use the Fibonacci retracement and the Fibonacci extension tool. Okay, so let's go right to it. Let's go to the Euro and USD chart. Right, so one of the things that I like to do is, guys, I added the 75%, right, or the 75 retracement area. Normally, I after doing some research, come to find out that this is also a really good resistance or support area, regardless of what direction you're trying to pull the fib on. And not only that, it's also really good for those impulsive moves. I haven't done a video on that, but I have my own theory on impulsive moves, right? So if you would like to, go ahead and add that 75% into your Fibonacci's, right? If you don't know how to do that, you just go to the fib levels, and right here you double click, change that to 0.075 or 0.75, sorry. And then double click on the very next one and click 75.0, right? Don't forget to hit that add button, and then once you do that, do whatever color you would like, and then hit OK. All right, so you've added that 75% on the Fibonacci level, right? So what's the rule of thumb when it comes to Fibonacci levels, right? You take one higher high. If you're trying to measure a pullback or retracement, right, on a move that possibly can go actually lower, for example, this higher high right here actually going down broke that level right there of support. So now we're looking into a actual reversal market, right? The market actually does actually go shoot lower. So you're looking at now a possible retracement. Now, when we talk about retracements, right, there are a lot of people that I guess have their own ways of pulling out those Fibonacci levels or measuring. You know, some people will go ahead and take this high right here, but that would mean that, I mean, if I go ahead and change it and I put it there, you see where I'm talking about? It's above the 75%. That doesn't really make too much sense. So take that previous higher high and now that lower low, right, because it did break support over here on this area, and now obviously we see that this is at a 50% retracement on the Fibonacci retracement tool. Okay, so now this is where you will pull out, right? A lot of people would say, those who know how to use their retracements probably don't know how to use the extension tool or the expansion tool, however you want to call it. All right, so these tools, I use them hand in hand with each other, right? So for example, if I see that this move gives me a 50% retracement, then I'll go ahead and pull my expansion tool, right? And I'll do the same thing. So you mark it up as the same thing from that higher high to the previous lower low. Now this is the part where a lot of people don't know. They just think, oh well, I'm just okay, and now I leave it right where it's at. But no, you have to take this little part right here and move it back to the 100% zone, which is basically 100% of the initial move, right? So you put it there, and it brings your number slight higher, right? So if that comes down all the way here, then it came back down because you're measuring this leg. Honestly, yeah, it's this leg that you're actually measuring. It's the pullback. So if it comes back down here, that it actually pulled back 100% of that move, right? So pulling that extension all the way up there seems about right. Then normally, the rule of thumb, guys, and if you can, you want to write this down. If the market goes down to a 0.38, right, or 38%, a 50 or 62%, then the market will normally go to the 161.8 or the 162%, right? Now, if the market reaches, it actually does a deeper pullback. Instead of the 75, you want to use a 79. There's another one, right? A 79, but I like to use a 75. If it reaches a 75, then most likely you're going to get a 1 1.27 or the 127% extension. Okay, so let's test it out. So for here, right, the market pulled back at a 50%. Okay, looking at the extension, we expect the market to go down to the 162. Okay, there's no coincidence, guys. At 161.8, look at that, right? And then it just so happens that it printed a nice double bottom, right? And that's obviously key, you know, a key pattern to look for when it comes to like reversals and whatnot. Now, remember these patterns, they're important, but they're most important because of the areas where they actually print out at, or where you spot these patterns, right? So you see a double bottom right at this support zone, and coincidentally, it's at the 161.8 or the 162, and that is highly important for you to notice when it comes to this market actually reversing or going down even lower, or whatever the case may be, right? Depending on what direction, whether you're selling or you're buying. All right, so that's one example, right? Let's go back to what the current market is showing right now, guys. When it comes to Fibonacci's, remember these are also hidden support resistance levels. I highly recommend you go ahead and plot your own support and resistance, right? So this is my method, guys. Give me 1 second while I'll go ahead and annotate this, or should I say mark these support and resistance levels in my charts real quick. All right, so let's go with those because that's where currently the market is sitting at right now. And actually, let's go with this one right here, which is the actual pullback area. So let's extend that real quick. All right, so we have the market currently here, right? The market pulls back to this area down here. I'm going to go ahead and extend that as well. There you go. So there's no coincidence that this wick ended up coming all the way down here just to retest this area right here. So this becomes, let's say if this is a reversal area, which in my opinion it is, right? So now you got your lower low or higher low, higher high, higher low. And as of right now, this is your higher high. However, I believe this market will continue to go up, and let's go ahead and pull the fib on it real quick. So this time you're measuring this leg from here to here, right? And you're wanting to find out the expansion of it or the extension of this move. So we'll go ahead from the higher low to the higher high, right? And at that point, we have it just a few pips short of the 61.8, okay? So we see where the market is currently sitting at. So we're going to go ahead and now pull the extension tool. So like as I said, guys, from the start of the move all the way to the top portion of that higher high, right? And then what you want to do is you want to move that back to the starting point. All right, so we got our 100% here because you're measuring this leg. We got our 100% move right here. And like I said, remember, rule of thumb, if the market pulls back to the 23, not the 23, I'm sorry, the 38, the 50, or the 62%, then at that point we can expect, or the market should move, extend to the 162, or if it pulls back to the 79%, which it has not at this point, then we can expect a move to at least to the 127, right? So what I want you guys to notice though is, again, these are support and resistance levels, right? Because if we look at the 100%, there's your resistance. If we look at the 127, what a coincidence, this gray bar falls right into that 127 level. All right, so that's a resistance area. And then come to if you look even higher, the 161.8 actually falls a little bit shorter than that resistance level, but you see all this noise right here, right? So honestly, you can go ahead and from the beginning of this red candle right here, guys, I'm going to go ahead and give a class also on support and resistance levels, because that is your bread and butter. So if you don't know how to plot support and resistance levels, you are in trouble. Okay, but anyways, so moving on, the market pulls back to almost a 61.8, right, retracement, and then now we expect the market to pull to the 162 based of our Fibonacci rule. Okay, so I do expect the market to move higher, and then once it reaches this zone, we can actually go ahead and then at that point pull another Fibonacci if the market starts pulling back, to possibly even going to the to this level right here, which is a 111. Okay, so guys, when it comes to the Fibonacci, again, like I said, I would definitely go ahead. Let me go ahead and delete this real quick so it's easier for you guys to see. I would definitely go ahead and add the 75% or the 79. I ideally like to use the 79%, the 75%. I would definitely add that to your charts. And then, of course, like I said, if you're pulling, if you're using, whatever the case may be, if you are using the Fibonacci tool, I highly recommend you use the expansion, right? Because a lot of people will only use their retracement tool, the Fibonacci retracement, only just to be like, okay, it pulled the 61.8, I'm going to go ahead and get into the market now, instead of actually having a strategy to actually enter the market, or they just go in right away. Okay, but some of them, even though some traders out there use the retracement tool, they do not know where to take their profits. They don't know how far the market is going to actually go extend, and they just go base. Sometimes they end up taking their profits a little bit early, which there's nothing wrong with that. Profits are profits. Or they stay in the market too long, right, and the market pulls back without realizing that, hey, this move is actually done and over with. It was time to take your profits, right? So guys, hopefully this video actually helps. If you guys have any other more questions, want to see more videos, please send me a message. I did see a message of one of my subscribers actually requesting more videos. Now that I am actually working from home, guys, making videos is actually even easier for me to do. So I will be uploading more videos. Thank you for watching. Please, if you like the video, like and subscribe. Tell your friends. Glad I can actually help and be part of your trading journey. All right, guys. If we have no questions, enjoy the rest of your week.